It finally happened. The SEC officially approved all 7 spot Bitcoin ETF applications yesterday. This is huge, and this is over 10 years in the making. The last few months, at least since summer of 2023, it looked increasingly likely that these approvals would happen. There was more back and forth with BlackRock, Fidelity, and ARK Invest and Bitwise with the SEC fine-tuning their applications for spot Bitcoin ETFs. So this is great news and should flow a lot of money into the Bitcoin space. I expect over $2 billion to flow into Bitcoin because of these ETFs just on day one alone. There's also going to be a lot of advertising dollars advertising these products from all of the ETF issuers. Probably about $100 million for advertising just in the first year. And remember, Bitcoin is a scarce, decentralized, programmatic, rules-based, no point of failure, decentralized currency with a finite supply. And all these ETFs being approved should increase demand and pour that money into Bitcoin. And because it has a finite supply, should make the price go up considerably. You have all these predictions from 100,000 this year to 250 to 500,000. Obviously, we'll have to see. I think something about 150,000 by the end of this year, maybe 500,000 by 2030. But either way, this is good news. I'm glad to see this. We also had the CPI inflation reading come out today, which was a little hotter than expected, coming in at 3.4% compared to the 3.2% estimated. And then the core CPI came in at 3.9% compared to the 3.8% estimated. This is a little hotter than expected, combined with the jobs and unemployment report from last Friday, which was also a little hotter than estimated. That came in at 216,000 jobs, and the unemployment rate ticked down to 3.7%. That shows that the economy is still strong, which is good for the economy, that that inflation is kind of stabilizing, and the unemployment and the jobs and unemployment picture looks strong. However, that increases the odds that the Federal Reserve might not cut interest rates in the March meeting, because the Fed might see that if the economy is still strong, there might not be a need for the rate cuts, and maybe at least as soon as March. And the market's pricing in 5 to 6 rate cuts for this year in 2024. So the reality is, if we see strong numbers like this, that might not happen. That could partially be why we saw a sell-off in the stock market the first 2 weeks of this year, is because investors were realizing, A, we had a strong run-up in the markets before year-end of 2023, and I think it was a little bit of profit-taking, but investors were starting to realize that perhaps maybe investors and market participants were getting ahead of themselves, thinking about these rate cuts by the Federal Reserve. Obviously, we'll see what happens, but if we see this strong data continue, rate cuts might be pushed back into the second quarter or third quarter of next year. We have to see, especially if the economy proves as strong and resilient as it is. So we have to stay tuned on that. Another reason why we saw a little bit of a sell-off in the first 2 weeks of this year was technically the Santa Claus rally, which was the last 5 days of the trading year combined with the first 2 days of the following trading year, is historically one of the strongest periods of performance in the market, usually up about 1.3%. However, this year it was down slightly. So you have to take that into account. So a lot of investors were cautious because they saw that happen. So that led to a little bit more selling, at least in the first 2 weeks of the year. However, the good news is that, all right, you have that data metric about the Santa Claus rally not working out. However, the good thing is that before that, stocks were up 9 weeks in a row. The stock market was up 9 weeks in a row. So it's normal for there to be a little bit of a pullback and profit taking. But historically, after the stock market being up 9 weeks in a row, the markets do well a year later, according to Carson Investment Research and Ryan Dietrich. So this is something also to keep in mind, and is why I also think this year, 2024, should still be a very strong year in the stock market, and that strength should continue. I expect, as I said in earlier videos a couple weeks ago, I expect Tech stocks to do very well, up about 25% for the year, and Dan Ives thinks that too, and I expect small cap stocks, like Tom Lee from Fundstrat says, to be up about 50% this year. But either way, the pullback that we saw in the market the first 2 weeks, I think will be short-lasting, and I expect more green and more upside in the weeks and months to come. I expect the first half of this year to be a little bit volatile. However, the second half of this year I expect to be pretty strong.